I just put my entire portfolio into 9 stocks. I'll reveal what all 9 of those are and show you exactly the trades that I took in this video. Welcome to the Outlier invitation only live stream. This is where we help you save time, make money, and start winning with less risk. And I'm joined here with my friend Joe, a Outlier University graduate who is going to be helping us today with the trading plans in place. So go ahead and subscribe if you haven't already. So we've been talking about plans M, A, ETF, and sit in cash and don't F up your portfolio for a while. And listen, if you want normal returns, this is not the place for you. But if you want outlier returns, you're in the right place. So we've been in plans sit in cash and don't F up. And just last Friday was our rollover day from SGov on the last day of the month to SGov the first day of the month. And Joe, I get to take this bad boy down. Got to go through the Christmas lights here. Take this bad boy down because we're no longer sitting in cash, not effing up our portfolio. I, like I said, am all in. I am 99.8% in now. Thank goodness that we have the opportunity to trade. Joe, you ready to do this?
I am. This is exciting. Finally, we get to trade Plan M.
And for those of you who don't know, over the summer we had a quant intern work with us, and one of the greatest things that's probably ever happened to me, because we have a staff of over 20 PhDs, actuaries, and all kinds of advanced math degrees that help us build the buy and sell signals. But it's only one thing to have the signals. It's another thing to take those signals and then build a plan around those signals, your entries, your exits, your position sizes, etc. And so that's where we came up with plans M and A and ETF, and also sit in cash and don't F up. So today is the first day we've ever got to put on the Plan M signals, and I'm very, very, very stoked about that. So it starts with, what is the market telling us? So I didn't even know before this morning, Joe, that we were ready to move, but we're ready to move. Now, remember, the market is 40% of any stocks move, and it starts with the S&P 500 having a bullish trend. So let's go there first. The SPY, while it's down today, does have a bullish trend. Your 10 over the 20, price over the 50. Never mind these circles on here. I was actually coaching a new podcast that we're sponsoring here, Jags Watches. So if you want to go check out Jags Watches and subscribe to his channel, you'll be hearing more about Outlier on that channel. I'm very excited about that. So I was giving Jags some coaching earlier. So we do have a SPY bullish trend. Pop into Outlier and we can see the SPY does have a buy signal. That's fresh as of today. And the SPY fear and greed heat map is at 53.53 and rising, which is exactly what we're looking for. So for Plan M, our market is set up as far as this goes. Now we got to take a look at the breadth, market breadth using swing signals. I do see right here a bullish uptrend on the number of buy signals. And I also see this down here, Joe. This is one of our big revelations over the summer, which is looking at not only buy signals versus sell signals, but uptrends versus downtrends. And you can see we're getting more and more and more uptrends, less and less and less downtrends. Now, that also applies in pretty much every single sector, with the exception of energy. Energy is the only one that's not bullish on the crossover here, but it does have the outlier channels of 2. So seriously, Joe, we are lit up beyond lit up right now. We've got everything lit up here for the market. Then we go to the sectors here. All of them have the outlier channels set up, and all of them, except for energy, have the sector breadth set up. So we're getting really, really strong results here. Now, the fear and greed heat map for the sectors and relative greed sector. Now, let's take a quick look at what that is. So we have a very quick bookmarklet that one of our amazing outliers, I think Vaclav, who I saw is here in the chat, helped build for us. And what's really cool about this is it shows us, now we are going to be building this into the market breadth tab, but for now, we have a great workaround. It shows us what the heat map value is for each individual sector and if it's moving up or down. And on here, we need to see under 70 and rising. Literally all of them are under 70 and every one of them is rising. Joe, we have so much to choose from here. However, relative greed is important. Now, relative greed measures how greedy a sector is compared to the greediness of the market. What you want to do is find the hottest sector that is the most greedy, and then find the most greedy stocks in that sector. That is what we're trying to do here. So the sector relative greed means sector greed higher than market greed. And what we see here is only energy, financials, and healthcare, real estate, and utilities have pulled through. All right. Now let's take it a step further. The breadth like I said, energy is not there. So we're down to financials, healthcare, and real estate and utilities are the four different ones, four different sectors that we could look at. Now, real healthcare is off the board forever. That actually had just terrible expectancy following this plan, and because of that, we're down to just a couple of sectors here, which means we'll be looking at financials, real estate, and utilities. Now, I'm not going to say I'm only going to trade financials. I'm not going to say I'm only going to trade utilities. I'm not going to say I'm only going to trade real estate. What I'm going to do is start with the highest back-tested signals and work my way down. Where is that at? I know that's on here somewhere. Okay, it's not on this slide, but that's okay. What I need to see next is professional YouTuber at work here. This. So now we can run our screener looking at just those sectors, and with positive backtests, 1 million average daily shares, buy signals, all market caps greater than $10, heat map 0 to 90, heat map moving up with a green overlay. And so this is what we're going to be looking at right here. And I swear that we have it listed somewhere. Start with the highest backtest and work our way down. A sort by outlier signal return. There you go. Sort by outlier signal return. Now, I am going to remove a rule. Only top 10. I am going to remove that rule. Scott kept telling me, Chris, you don't have to do just the top 10. And he's totally right. If I had only done that, then I'd only put on, I think, 3 trades today. And I have 9 trades on now. So that is a rule that I am amending slightly based on our back testing data. No other reason than that. Just because it was something that Scott was telling me. Looking at it in real time is totally different than looking at it in a simulation, if you want to think of it that way, Joe, as we're doing the data and the back testing. So I was like, you know what? We really do have more opportunities that I'm leaving on the table. So I'm going to take that off for now. All right. So looking at this here, we're going to start with the highest backtested signals, which is super cool because on this bookmarklet that we talked about earlier, it actually sorts them by signal return. Now, this is the outlier buy and sell signals. Isn't that cool, Joe? I love this. It sorts everything for you. This bookmarklet is so sick. To do the bookmarklet is not that hard at all. All you got to do is go into the FAQ and member contributions. And then there is one called Bookmarklets for Chrome. This is a video on how to set up the bookmarklet. This is the bookmarklet itself. What's really cool is it does so much of the work for you already. Vaclav, you are a genius. Thank you so much. Thank you so much for doing that. So what I did was I copied this to my clipboard and I dropped it in a spreadsheet. And as you can see, there's a buttload to go through here. There's 48 different ones to go through. I've saved you the hassle of going through all these. And so we're going to go through here and I'm going to show you the ones that I actually did take the trades on. Now, a lot of these have outlier blocks. And so let's go through what an outlier block looks like, because when we get to the stock part of the plan, the stock needs to be in a bullish trend, needs to have a buy signal, the fear and greed needs to be rising, and then the stock needs to be at least 2% away from an order block of any age. Doesn't matter if it's from yesterday, doesn't matter if it's from yesteryear. It still needs to be at least 2% away from an order block. So let's look at a couple of these, right? AGNC looks like this, right? Crashing right up into an order block. It's got 97 basis points up away from that. It's hit this one 2 times already and been rejected. So I'm not interested. BN inside of this order block right here and another order block right there. BXP fighting some order blocks right here. CBRE. You get the point, right? We don't have to fight all this. I've already done all the work for you. As a professional investor, this is literally what I do. This is literally what I do. So that is done. We've already gone through and picked out the ones that are at least 2% away from their order blocks. All their prices are over the 10 EMA and the price is greater than $10. So what I want to do now is I want to start on the stocks that I took. Hang on. I'm trying to sort this the right way. The stocks that I took from top to bottom, the actual trades that I put on in the order that they came through as far as the, you know what, I'll just go over to my broker platform and start at the oldest one because that's the one that got filled first, Jeff. So this stock right here, I got filled in at, where did I get filled in, Joe?
Let's see. You did the 5250s for $5.35. 535.
535. Okay, so let's take a look at Jeff. Joe, do me a favor. As we talk about these and I pull up the options chain, do me a favor and start dropping in the actual tray that I put in over here. That way I can talk to where we got filled.
Okay.
Good to go. Thank you, my friend. So Joe is helping us out because we're going to go in and we are going to trade these as well in the paper trading outlier fund until January 1st. On January 1st, we will be trading. This will be a $50,000 account that will be trading live. So I'm excited to share that with you. Okay. So looking at this, let's go into the criteria for options liquidity. We want to start at 21 days to expiration, where we can move closer or further away based on liquidity. I want to see at least 250 open interest with less than 50-cent bid-ask spread and a 30% absolute max extrinsic value. I'm shooting for 20%, but if it goes up to 30%, that will be my absolute max. And that is the uncertainty value that will decay over time. So we want to minimize that. And generally, I start at the 80 delta calls and I work around to find liquidity. And you'll see some are right at 80, some are higher, and some are lower. And that's okay. That's part of the plan. So let's start on Jeff. Looking at the options chain for Jeff, we don't have 21 days. So we're going to look most of these on December 19th. One of them is not December 19th, but most of them are December 19th. Looking over here on the strikes, I can see the 87 delta only has 131 open interest. That's not enough for me. On the 77 delta, I see 1,068 open interest. Now we're talking. Come over here and I look at the extrinsic value of 91 cents. So this does require a tiny bit of manual work. Better than digging ditches, Joe. 91 cents divided by the ask price, the actual price it's being offered at, 520, gets you 17.5% of extrinsic value. That extrinsic value is our uncertainty value. And our uncertainty value is what we're trying to minimize here. So going to this one here, now we need to get the position sizes for this plan. In fact, I'll just go ahead and pull this over right now and you can see all the trades that we put on. This is the account balance of the account that we're trading in. Jeff, using the 80 delta. I mean, you can modify this to be the 77 delta or whatever it is. In fact, what is it? 78 delta. Generally, that's where I put it at, 80 delta, and I'm not really stressed. I'm not going to be that pedantic about it. If you are only trading shares, that would be 1,366 shares to get a 6.25% risk. Do not do 6.25% risk. If you have never traded before or never traded with Outlier before, I would suggest 1% risk. Right? 1% risk is going to be significantly less, and that's okay. You need to understand what you're doing before you jump all the way in. But I trade at 6.25% risk. So this is a share size of 1,366 shares, which, Joe, that would be 85% of my portfolio if I want to trail those shares. That's a whole butt ton.
If you do that, you won't be able to trade anything else. So there's got to be a better way.
There has to be a better way, Joe. Why in the wide world of sports would I want to put 85% of my account into one stock when I could put it in all kinds of other stocks, right? We got lots of different setups today. So by doing long, deep in the money calls, we are doing what's called a stock replacement. And by doing so, we're paying significantly less than we would be otherwise. Instead of it being 85% of my account, this is only going to be 10%, give or take, of my account in this one trade. Pretty cool, right? It's the equivalent of taking a $55 stock, $56 stock, and paying $5.70 for it. Joe, I feel like that's like a 90% discount. A $56 stock, and we're going to pay $5.70 for. That's like a 90% discount right there.
And sweet, right? And you can roll it, which is a ninja hack.
That's right. You cannot do that. You cannot do that when you're trading just stock alone. So we're basically buying the stock for $5 a share. We're getting roughly 75 shares instead of 100. And that's okay, because that's the leverage factor we have to live with. We're going to be able to roll it, and we're going to be able to do all kinds of great stuff with this. So let me get the position size for Jeff here. It is 17 in this account. So you just come down here and go, you've got the 52.5, 17. And like I say, don't do this. I'm telling you right now, do not, under any circumstance, follow the trades that I'm putting on right now. In fact, Joe, I'm looking at this. I think we need to drop some things off. We could even drop ourselves off. There we go. Do not put any of these trades on. I'm a random guy on the internet. Don't listen to anything that I say. We're going to have to bump this limit price up quite a bit. So let's do 570. Where do I get filled at? I got filled at 535 on Jeff a little bit ago. Let's see where we get filled at on here. So here's the cool thing when you use a limit order. By putting up 570, now it's 530. So I'm going to push it back to 530. By putting it at 530, I will not get filled at any price higher than this. It's like walking into the store and saying, I only want to pay this price or better. This price or better. That's what the limit order does for you. If you do market, it will get you filled at the next price, period. There's nothing you can do about it. It could be great. It could be awful. It will get you filled at the next price. And you don't want to take that risk. So we're going to put this back at 530 on 17 contracts, hit send. And let's see if we're going to get filled. Buy to open status is still open. So that's okay. All we got to do is come over to our orders. We're going to, oh, that's where I cleared out SGov. We're going to replace. Where's my option for replace? There it is. Hang on. Down here. We're going to replace with 535. And it should do it right there. Open, still not filled. So we can do it again. Okay. Just click off, click back on. Let's hit it to 540. Now you're probably watching this saying, aha, I don't want to have to pay more than this. There we go. Filled at 540. Filled at 540 in this account. Not my actual account was filled at 535. Yeah. And that's going to be part of the thing. Part of the thing is that you're going to have to pay up. You're going to have to pay up, and that's okay. Remember, we want to buy stocks as they're crashing up, not as they're crashing down. So, Joe, what was my entry on this again? Joe, you're muted.
Oh, it was trading at 56.96.
56.96. Cool. Awesome. Got it. All right, here we go. So that's where I'm in, and we'll fill in all the details on Jeff in just a little bit. So let's move on to the next one. The next one I put on was RKT. So let's go to RKT. We can see RKT pushing through this order block right here a couple days ago. No earnings or anything in the way of this. Now let's go into RKT. Now, one thing you'll notice is that I've already made my plans. I've already made my trades, and I have no stress about this. I understand the risk that I'm taking, and I'm okay with that. You've got to be okay with that too. Now, you've also got to be okay with there's so much liquidity over here. So we need to figure out which strike we want to go for. So roughly the 80 delta is at $18. That's 32 cents on 252. So 32 divided by 252. Looking at this strike right here. Gives me 12%. Is that the one I got filled on? The 18 strike? RKT 18 strike. Yes, this is the one I bought. I purchased it a little bit ago for $2.20. So if we were going to do that right now, we come over here to the 18 strike. And right now it's trading a little bit higher. It's at 248. And let's get our position size on RKT. RKT is 38. You come over here, you type in 38. You hit send. Let's see if we're filled. RKT is working. Okay. We'll take into that. We'll take that into account in just a couple of minutes. Now, again, like I've already gone through because I know my plans, and I talked about this earlier. I've already gone through and I've picked out the ones that fit my plan. And so for you, this could take a while, right? Joe, you've got to come up with the plan that you know how to go through. You've got to come up with a plan that you can execute blindfolded, up, both hands tied behind your back, upside down, put in a tank of water with the padlock on the outside as if you were Houdini.
Mm-hmm. Yeah, and I like to go through the slides and look at all the signals and get all the way until I've got a screener filled out with the stocks I'm interested in and the sectors that I'm willing to trade. And then I'll go in and see if any of them even have options. And if they have options, is there any open interest? And so I'm building this Excel sheet that lists out all of the ones that make it through all my criteria. And then I put them in the position sizer. So all that's done. So I know how many of these trades I can actually put on with the account size I have. So I do not use margin. That's key. And so, like you can see how Chris is doing, he has this all laid out long before he starts trading any of them. He knows exactly what he's going to do.
That's exactly right. And what's really cool to your point, Joe, is this does all the calculation for you. And instead of taking 68% of your account, if you use this plan and you got filled at, I don't know, like 250 or so, that'd only be about 10% of your account. And so in total, we're looking right at 100% of the account. So let's see if we can get filled on all these. Let's see if that one got filled just yet. RKT is still open. That's okay. So let's bump it up. We'll do 252 replace. Now again, there are times where you will have to pay up, and that is okay. Just understand that if you want to play the game, you're going to have to pay up. Now, some people say, well, I don't want to pay extra. That could be the lowest price it is ever. I mean, legitimately, if you don't get filled right then when you're trying to get filled because it fit your plan and you're trying to like eke out a couple pennies out of it, it may potentially never, ever, ever come to your limit price and it will go on without you forever. So what's it worth? Giving up a couple dollars to make sure you're in on a trade that sets up for you, or waiting, trying to be super cheap and waiting for it to come back? I don't know about you, Joe, but I'd rather be in. Joe, where'd I get filled on RKT?
RKT, 18 calls for $2.20 when trading at 1983.
1983. Okay. Cool. Oh, wow.
Ooh,
That's
nice buy.
Listen, I didn't do anything different than what you could do. All I'm doing right now is showing you the plan that I went through. There's nothing different. I did all of this around 1:38 p.m. Central Time. In fact, I could tell you specifically exactly when I got filled. RKT was filled at 1:38:56. 1 hour, 38 and 56 seconds. That's what time I got filled. You could do the exact same thing. Okay. So let's go on to the next one. The next one that fit my plan was SYF. SYF is right here. Synchrony Financial. Again, another big, beautiful trade right here. Now, I should also pop into Outlier and show you what SYF looks like. Fine. SYF. Right there. Synchrony Financial. And we can take a look at it over here. It's probably going to have all 9, which it does, which is great. I'd have a lot of foot in my mouth right there if it didn't have all 9. But you can see, like, this is what we're looking for, right? We want a strong sector breadth. We want strong fear and greed in the sector. We want strong fear and greed in the stock. And we want a buy signal inside of an uptrend. This is exactly what you're looking for. Exactly what you're looking for. That makes trading effortless. Now, when I was doing that one-on-one coaching with Jags Watches, a new podcast that we're sponsoring, I had the conversation with him earlier, and I'm like, listen, you are a hunter in, you're out hunting. Joe, you're a hunter, right? Don't you like to hunt?
Oh, yeah.
I'm not a hunter. I have too much of a soft heart for that. But you're sitting up in your deer blind, right? And you're waiting for the perfect shot. And even when the 28-point buck walks through and you're like, let's freaking go. This is exactly what I've been waiting for my entire life. This is the greatest shot ever. You could still miss. Isn't that crazy, Joe? You could actually still miss.
And I tell you what, you miss a lot more often if you let emotion get in play.
That's a good point. That's a great point. So we've taken a look at this. Let's also, while we're talking, talk about the Plan M backtesting, because we're going to go through all the exit signals and mark them up on the charts here. But let's also go through the Plan M backtesting, because backtested over 7,000 trades, this had a 57% win rate, meaning 43% of the time we miss the shot, but 57% of the time we get the shot. The average trade percent return on the stock, not any leverage, is 2.25%. Now, that doesn't sound like a whole lot, but remember, that's the average return, including all the losers and including all the winners. And one thing that I'm really excited about is the average move up on winning trades is 3 ATRs, meaning that on average, the winning trades have a 3 ATR up move during the life cycle of the trade. Now, some of these are going to be way more, some way less. And then also you'll notice on the losers, the average up move at some point in the life cycle is 0.6 ATR, meaning we're going to get our first ATR roll at half an ATR. We're going to do half ATR, 1, 2, 3, 4. That's the plan. That way we are defensive on our trades as fast as we possibly can. All right. So let's get back into SYF and let's find a strike for SYF. We're already filled in Rocket. We're filled in Jeff. Let's go to SYF. And we're looking at the December 19s. And which strike did I get? Actually, good idea, Joe. Let's pop off here so y'all can see better. SYF. I got filled on the December 19th, 75 calls. So looking at this over here, again, this one is at the 70 delta. This one has $1.33 of extrinsic value on 450. So 133 divided by 450. Well, hang on. 133 divided by 450. There we go. 29.5%. That is really, really, really close to my 30% limit, but it is not at my 30% limit. So therefore, I am taking the trade. I took the trade. Joe, where did I get filled at, my friend?
78.09. You paid $4.38.
Here we go. 78.09. And how many do we need to get here? SYF 18 contracts. So we just come over here. We go to 75. We go 18 contracts. Let's see if we can get filled at 450. Send. And what's cool, like you could put $99 in here if you wanted to, but it's only going to get filled at what the market price is as well. So you could go way over, but you're going to get filled at a market price there. Okay, so we got filled on SYF. Our order was filled here in the outlier fund at 450. There you go. There you go. Average price 450. Okay, let's move to the next one. Let me try and speed it up a little bit. IVZ. IVZ. Let's go to IVZ. Here has about 5.69% move up to this order block, which is great. I'll gladly take a 5% move. Putting it here. And let's go to IVZ's options chain. Now, again, I understand that this is going to feel fast. I understand that this is going to feel a little overwhelming to a lot of people. And that's okay if this is feeling overwhelming to you. That's part of the learning process. Don't feel bad about it. Just understand, take notes, and then try and implement it yourself. But do not follow anything that I say. This is the 74 delta, 827 open interest, 48 cents on 215. Joe, why wouldn't I go with this one down here? Tell me why I wouldn't go with the 24 strike.
Let's see. Open interest is good. 3,000, right? What did you say? Wait.
No, I was saying it's great. Tons of
Yeah,
open
great.
interest.
Yeah. So lots of open interest. What's the math on extrinsic? So 0.68 divided by 1.45. Whoa, wow, that's way over 20. It's way over 30. It's in the outfield.
Yeah. There's
Way
no
too high.
way I'm taking that trade. No way, because nearly half of my investment here is subject to decay. I don't want that.
No.
Let's go up one. 48 cents on 215 is 22%.
There you go. That's a little better.
That's a lot better. That's
Yeah.
significantly better. In fact, I believe the 23 strike is what I got.
Mm-hmm.
Okay. Let's go ahead and get filled on IVZ. I need to get 44 contracts. 44 contracts. Now, to somebody, they hear 44 contracts and they're like, oh my God, this dude trades 44 contracts? Some people are going to be like, 44 contracts, that's nothing. Oh, that's the wrong spot. Sorry. 44 contracts on IVZ. This still shows SYF down there. Hang on. There we go. Okay. 44 on quantity. And let's just go for 215. See where we get filled at. All right, filled at 215. Okay. And Joe, what was the price that I got filled at on IVZ?
24.51.
24.51. Thank you, my friend. Okay. And let's go on to the next one. CFG. There's a lot to do today. Now, we're only talking about the entries. We still have to go through all the exits here. Okay. Still have a lot to do on the exits. CFG. Joe, do you think people are asleep now?
Oh no, if they're anything like me, they're highly entertained and they are trying to learn as fast as they can.
Highly entertained?
Mm-hmm. I am.
Not by a random guy on the internet. No way. No way. Okay, looking at CFG. One of these I did in the January expiration. It is not CFG. It is not CFG. Looking over here on the December expiration, the 85 delta has 127 on open interest. The 71 delta has 770 open interest. So clearly I'm going to go for the 71 delta. So 78 cents on 290. is 26%. That'll do. That'll do. And how many do I need? This is CFG. I need 28 contracts. And let's do 285. Now you'll notice as I go through how carefree that I can feel about this. Right. As Trading in the Zone talks about, being in a carefree state of mind when it comes to trading. Why? Because I know what I'm going to do. I don't have to stress. I don't have to worry. I'm not going to lose sleep over this because I position sized to a level that I'm comfortable with. You need to do the same. And I know where I'm going to get out. And if it goes down, it goes down. If it goes up, it goes up. I'm not going to stress either way. So we are in CFG. And Joe, where was my fill price, my friend?
54.58.
54.58. All right. Cool. Let's go to the next one, which is HBAN. Now, I put a big position in on HBAN. I told Joe, I was like, I own the market of HBAN. Let me show you why I said that. Hang on. HBAN.
We could ask the audience why that might be.
Oh, yeah?
Yeah.
All right. Let's ask the audience. Why might that be that Chris owns the market on HBAN?
Yeah.
What is that?
What is the mathematical criteria that would lead Chris to being the market leader? Does anybody know? It's 3 letters. It's not BIG.
I don't know. We'll keep going. We'll keep going. So I'm looking at the 87 delta, 452 open interest, and then 10 cent extrinsic, which is way less than 10% over here. So that's great. So I'm going to get in a Bain ATR. Let's keep going. Let's keep going. So we're looking at, in fact, let's do this. We're looking at HBAN on the December 19. So there, for some reason, there's 2 on Tradier. You obviously want to go with the one that has more liquidity. 452 is plenty. 10 cents on 160. So this would be the 15 strike is the one that I went with. HBAN 15 strike for December 19th. Yep. ATR. There you go. It has an itty bitty baby ATR. So therefore, I got to put on a giant position. So over here, I'll show you how big it was on this particular account. 108. 108. That's a lot. Joe, that's a lot. A lot of people would be scared to death of that.
Mm-hmm.
But it's ATR. It's only 33 cents. That's by far the lowest ATR of anything we've looked at. And the ATR measures the volatility of a stock. So this is the least volatile stock of any that we've looked at. So in order to keep my risk the same amongst all of them, I need to have a bigger position size here, whereas I need to have a smaller position size on something like CFG. So CFG is about 4 times bigger than this. Let me undo that. CFG is about 4 times bigger in ATR than HBAN. So my position size is therefore about 4 times smaller. That makes sense? That makes sense, right, Joe?
It does.
Joe, you want to know another fun story about leverage? If I were to get all of these shares, that would be 155% of my account. 155% of my account in one trade.
How are you going to do that?
Well, I'm going to go with long calls, deep in the money ones. And it's going to cost about 20% of my account, which I know for some people that's like, oh, that's pretty huge. But I'm only risking 6%. 20% of my account balance, yet I'm not going to let that go to 0. I'm only going to let it go down enough to be 6% in risk to my account. Does that make sense?
It does.
Cool. Let's keep going. Let's see. On to the HBAN here. And I need to get, how many was it? 108? Yeah, 108. HBAN 15s, 108. If you're liking this today, if you're learning something today, put hashtag outlier in the chat. Hashtag outlier in the chat. This one's open, so I need to adjust the price. Replace. There we go. Hashtag outlier. Are we filled? We're filled. Okay, we're good. We're good. I got to turn the comments off though, because I got to show so much stuff going on. Apologies, but I'm glad to see everybody Everybody getting their outlier on. Very cool. I'm excited about that. I'm glad to help you out. This is my calling in life, so I'm really glad that we can do this together. Okay. So we're done with HBAN. Did we mark it on the chart where we got in? Joe, what was my fill price? Or the price of the stock?
H-band 1644.
1644. Again, you could have done this at any point in the day. I'm just showing you what I did today. All right, cool. Let's go to the next one. So much to do. We have 3 more to go. New NU. NU. As you can see, looking beautiful. Let's go to the NU options chain, portfolio, options grid, new. And we can see December 19th. Lots of liquidity. So much liquidity to choose from, Joe. Anywhere you want to go, we got lots of liquidity here.
Oh, yeah.
So we could go for the 64 delta, but that's pretty much half of the price and extrinsic value. I don't want that. We go for the 84 delta, which is 13,000, 14 cents on $1.59. That's less than 10%. I could go with that one right there. In fact, did I go with the 16s on new? Let me double check my account.
Not.
Did not. I actually did not. Interestingly, what do you think I went for? If I didn't go for the 16s, what did I go for? Ooh, I don't remember why I went with the 16 and a half. Oh, wait, I total spoiler right there. I don't remember why I went for the 16 and a half instead of the 16s. I think because I was like, oh, it's got enough open interest. The extrinsic value is good. It costs a little bit less. That's what I did. Yeah.
Well, if it costs less, you can put more of them on. So sometimes you can do that.
Sure. Yeah, totally. All right. So let's go to NU 16 and a halves. 16 and a halves. How many did I get here? 64. So I just go here to 64. Sorry, let's move our big heads out of the way, Joe, to 64. And let's say, let's just try 118. New filled at 117. Okay. So, Joe, what was my price of new where I got filled at earlier, please?
1740.
1740. I'll have this filled in for next time. That way we don't have to ask Joe. I'll show you where I got in earlier. And again, you could have done this at any point during the day. I'm just showing you exactly what I did. Okay. 1740 is where I get into NU. I have 2 more to go, and we're finally at the one that's not the same expiration. That's Zion. Zion Bank, Z-I-O-N. Now, Skinny Buff Guy, who's a Bravo class student, asked me, why'd you go with January instead of December? And I'll be 100% honest with you. I think it defaulted to January, and I didn't notice. I think that's exactly what happened because I don't have a good reason why. Because the 80 delta here, the 50 strike, would have been $4.40. The 74 delta here, the 50 strike, would have been $5.10. So it would have saved me like nearly $1 to go 1 period sooner. Honest to goodness, I think I just I wouldn't even call it a trading error because I still followed my plan. There's nothing wrong with it. It just cost me a little bit more money. So I'm looking at the 50 strike here, 728 open interest, 74 delta, $1.22 on 510 is how much? 122, 510 is 23.9%. Hey, Shane, one of our students in oh, that wasn't the Skinny Buff Guy. I thought it was you. I'll take the credit or the blame. Sorry, I thought it was you, bro. Shane, one of our Outlier U students, says, so far for my trades, roughly 80% what Chris took. I don't know why you do that. How dare you? Just a random guy on the internet, my friend. Don't listen to anything that I say. 50 strike on Zion. How many would I get here? 26 contracts. Now, again, 26 contracts for you may be nothing, or 26 contracts for you could be like the entirety of your account. Do not trade what I'm showing you here. Come up with your plan and trade your plan. All right, we're filled in Zion on the correct expiration that I did earlier. Joe, what was my Zion price that I got filled at? Oh, we're about 10% away from an order block, so that's not going to be an issue for us.
5374.
5374. Thank you, my friend. 53.74. Okay. Now, again, we've only discussed the entries. We still have to go through the exits. There is a lot of work involved in trading. It's not this sexy Rolex Lambo lifestyle that a lot of people want to put off to you, right? There actually is a lot of work that goes into following a full plan. Let's go next to the very last one, Ally. Ally, the very last one, has 5% up to this order block right here. And let's go to Ally. And let's see, which one would I go for? Okay. 97 has 330 open interest, which would be fine, but the spread's at $1.50 wide there. I don't want that one. We could go with the 85 delta here. That one looks pretty good, although that's 60 cents wide right now. We go the 81 delta here. That's $1.20 wide right now. We could go with the 69 delta, and that's 60 cents wide. So these have kind of widened out since I put on my trade. Probably because we're getting close to the end of the day. I got the December 19th 39s. That's where I got in. Now, I got filled when this was trading at $3.10. So it's gone up quite a bit since then. Again, you could have done this at any point during the day. Oh, this is January. Thank you, my friend. Thank you. I just realized that. That was Tony. See, it defaulted. I didn't even realize. There you go. That's a perfect example of when that can happen. So again, I got filled on this December 19th, 39 calls right there. That's 20 cents wide. That's what Chris was looking for. Way better. Do you see how Joe, do you see how easy it is where you could be on one expiration without even realizing it?
Mm-hmm.
Totally a thing. Totally a thing. All right. So plenty of open interest, 58 cents on 310. So 58 divided by 310 is 18%. I love that. I love 18% right there. How many do I need? I need our final one here of 31 contracts. Now, this should get us pretty much 100% into the market. 31 contracts. And let's go 310. Send. Yeah, I was about to say it might even reject us because that's a little bit too much. So we could go down, maybe bump it down by 2 contracts. See if that gets filled. Nope, a little bit more. Now, on my account, I didn't have an issue with that. In this account, it seems like we spent a little bit extra. Oh, I didn't go with the 26 yet. On the others, which has pushed us over, and now we got filled at 26. There you go. I don't know. I wouldn't call that a trading error. As long as you're following your plan, my friend. All right, cool. So we're basically 100% in to the market. Joe, thank you for posting all of these in Discord. You're more than welcome to see what trades we put on. Joe, what was my fill price on the stock for Ally?
Let's see, 41.40.
Okay. So we have Zion, US Bank, SYF, RKT. We don't have regions. We don't have OBDC. We have New, we have Jeff, we have IVZ, we have HBAN, we have CFG, and we have Ally. We have 9 trades on right now. That's a lot. Where in the wide world of sports you think you're going to get out of these, Joe?
Well, I would have to reference the slide deck and look at the signals.
I agree. Let's do this. Let's go add in our half ATR and our 1 ATRs and all of our exit points here on these, because we need to know what they are. Because our exit signals are a sell signal, a 10-20 bearish cross, an outlier block that's at least 120 calendar days old, any earnings, a gap up and crap, a 2 ATR stop, and a 3 ATR emergency midday exit. So that's what we need to go mark on here real quick. It's quite a lot. Let's go to Zion first. We'll start there. So let's calculate this. So the ATR value on Zion is $1.48. Okay, let's clear this out. 1.48 divided by 2 is 74 cents. So that's going to be our half ATR original first entry rolling point. 74 cents on top of 53.74 is 54.48. So we can just do this, 54.48. So that's half ATR. And we talked about why we have that half ATR. 1 ATR is going to be 148 plus our entry point, 53.76, 55.22. Joe, this is the not sexy part of being a fund manager. There's a lot of work to do. A lot of work to do.
There is a lot of work, but it's also kind of fun filling out the charts, I find, because you can visually see where it is you're going to get out if one of the signals gets hit, and
Oh, for sure.
it's so relaxing to have a plan that you don't have to think about. You just check. Okay, it hit, didn't hit, we're good.
I love it. 2 ATRs down, so 1.48. That's not what I wanted. 1.48 times 2. Okay. So the market's closed. Thank you, Joe, for the bell.
I actually don't know which of my apps runs it, but I kind of like it. So
50.78 is our 2 ATR stop loss. And then our 3 ATR emergency exit is 50. Oh, I did that the wrong way. 49.30. So you could come through and you could put an alert on this if you really wanted to. That I personally don't plan on doing that. To be alerted if it does hit this midday, and then you get out, right? You get out. So we're done with Zion. We understand the exit points here. Sell signal, 1020 bearish cross, and all the above right there. So let's go on to, we did not take USB. Let's go to SYF. Oh, this is going to be easy because it's right at our right point here. Because I can go to the deep thought indicator and I can turn on show current plan markup. Look at that. Ooh, that makes it life a lot easier when it's close to the right price.
cheating.
You know what? I think tomorrow I'll have all these marked up, or I should say next time I'll have all these marked up. So then I don't have to do all this on the live stream.
It's good though. It's good to see it. It's good to see the whole process. I mean, a lot of folks may not even know how do you find ATR, right? Well, you just add the ATR indicator in and you make sure it's on 14 period, and you'll get the blue box in the right hand side of the chart that tells you what the ATR is.
Yeah. The ATR on this one is 2. So it goes 78.05 plus half an ATR is 1, gets you 79.05. Needs to be our half ATR first rolling point. At 79 exactly. All right, cool. Now, the reason that I turned that on is so I could have a little shortcut to do this, because when I turn it off, it goes away. It goes away. So now these are static lines that'll stay there as long as I keep them. Let's go to RKT. See right here, RKT. It's moved quite a lot since I put it on earlier on in the day. And so therefore, I can't really use the same plan markup. You know what I mean, Joe? Does that make sense? Because this is going to be based on the close price, which is
Yeah.
very different than where I got in.
Yep.
And again, you can get in anytime during the day. You don't have to do what I'm doing at the time that I'm doing. I'm trying to get you guys independent in that way. Current ATR on this is 0.95. So 0.95 divided by 2 plus 19.83 is where I got in. 2030 is our FATR roll up point. Okay. You can see right now that if I had put this on earlier on in the day, and it's where it's at right now, I actually could have rolled it up right now. Where would I roll RKT? Let's take a look at that. I think that's a great question. Joe, that's a great question.
Yes, it is. We love to roll.
All right, so we're here. No, we're not. We're here. Where's my strike? Why is this not lit up? Hang on. Portfolio, RKT, 18 calls, 12, 19. Yeah, I don't know why it's not lit. It should be lit up. Either way. So we could roll from like the 18 to the 19, right? As long as it's got plenty of open interest, as long as the extrinsic value is in the right spot, which it is, you could roll it up and take like 80 cents of credit right away. And we put this trade on for, how much do we put this trade on? RKT, we spent $2 and no, how much do we put it on for? Orders. There we go. RKT, we got filled at 252. So if we take in 80 cents right away, that's basically a third of our risk off the table right away. Isn't that cool? Just
Very
that
cool.
fast.
Very cool.
Okay, let's keep going. +1 ATR. I'm gonna do it like this. I find it to be a little bit faster. And then I'll just move them around in a minute. And these are little templates that I created. That way I already had the text in place, and all I have to do is just move them around to the right spot. So opening was 1983 plus 0.95 on the ATR is 2078. Okay, do it again. It says to 2173. So we know what our first three rolling ports are. And then we need to go 95 point or 0.95 times 2 divided by times. Can't divide by 0, Joe. 1.9 from 1983 is 1793. Okay, and our 3 ATR is going to be even further down. And let's do 0.95, 1698. Now, you'll notice that these stops are a lot wider than they used to be. That is intentional. That is part of the plan. Because we have found that we were choking off a lot of trades, Joe. I don't want to choke off any trades. I want these trades to run. I want them to work. On average, they're like 15, 18 days, something like that. 19 days on the S&P 500. So we're going to give them time right now. Now I know one of these is going to be down tomorrow morning, and somebody's going to post in the Discord, it's down. The whole world is ending. Have a plan. Follow your plan. Don't stress. Whatever that plan is, I don't care what your plan is. Follow that plan. All right, we could do the deep thought things on this one. It's only 8 cents off.
So we have a question: where do we get the sizing worksheet? If you go to Discord and go to FAQ and member contributions, which is a channel, inside that channel you have all the resources like the slide deck, the multi-plan portfolio manager, the user's guide. Definitely go in there, look around, get that worksheet, and look through those other resources. Lots of good info in there.
Hey, Joe, let's do that. While I'm marking up the charts, will you go through any questions that might have been asked, and we can answer them as we're going? That sounds like a great idea, dude.
Yep. Let's see. First question. Still has cash in the account. Should he go into SPXL? Well, you know it. What does your plan say, right? But if you were trying to use the outlier plans as a template, you could go in and see if the plan ETF signals would tell you to get in, and if they do tell you to get in, that's something you could have a look at. I don't actually know right now if all those signals are open, but that's how I would approach it.
It's not on plan ETF because of the order block on SPY. In that case, I would actually put it back in SGov. I would put it back in SGov because that way you're still going to earn interest overnight at least.
Why are we rolling at half ATR and not 1 ATR? I believe, and correct me, that the back testing showed that even the trades that fail will make it to half ATR. So when you roll, you're taking some of your risk off the table. Even if it goes negative, at least you pulled some of your trade off the table.
Yes, exactly. Let's take a look at that slide real quick. So the average up move on plan M, where's that at? Here. The average up move on plan M, even on a losing trade, was 0.6 ATR, meaning at some point during the cycle of the open to close on the trade, it went up on average 0.6 ATR across all the losing trades. So by doing that, we're taking risk off the table. We are taking partial profits, and we're keeping the trade alive. If it does happen to work out, then we've already got our winning trade. We've already rolled it once. If it doesn't work out, that's okay. We actually lose less by doing so. So it's a great question, and it's a very defensive move to do it as fast as we can, right? Take those profits while they're there, yet we keep the trade alive. Such a ninja hack.
Comment here. Hopefully, this calms down in folks who had never seen a plan A or M buy signal. Well, that would include everyone, even Chris. We've never seen a plan A or M buy signal. So we are all, excited and learning, and don't feel like just because you're new that you're behind the curve.
And
Whoops.
to that same point, right? As exciting as this is, there's no guarantee, right? You're the hunter, you're sitting in the stand, you're taking your shot, and some shots will hit and some shots will miss, and that is okay. You got to understand that part of the plan includes losers. Part of the plan includes losers. If you don't have losers as part of your plan, you don't have a plan. 43% of the time, this is a losing plan. Now, it could be the first. Here's the thing, Joe. It could be the first 3 trades that we take off in this plan of 9 that are losers. It's very possible. There's going to be people saying, Plan M is the worst. I can't believe this. Blah, blah, blah. And then the other 6 go on to make Vuku bucks, as Nana Yule would say. And you're like, oh, wait a minute. I get it now. Okay. Part of the thing. This is part of the plan. Let's keep going. I like answering questions as I'm working on this because I'm just working in the background here.
Yeah. Did we look at energy stocks? Well, energy stocks did not make it through the signals.
Oh,
You get all the way until you're checking to see if market breadth on energy stocks is bearish or bullish. And it turns out it's bearish. So no, that would not have made it through the signals. Let's see. Isn't trimming stock position almost the same as rolling an option? No,
mm-mm.
no, you're pulling risk off the table, but you're still allowing the trade to run.
I think of it this way: if every share is 1 delta, you're trying to keep your deltas roughly at 80 in this case. So it mimics the original trade that you put on. So you're going to go from 80, and if it's a working trade, it's going to go up to 90 delta at some point, and you're just rolling back to the 80 delta. If you had 100 shares on, and let's say you took 20 off, you now have 20% less of a position that you can earn on. However, by rolling, we're basically getting the exact same position we started with, still in our account, and we get to take partial profits, and we reduce risk. It is something you cannot do in stock, because like you're actually going to have a smaller position, whereas in rolling it's different.
Question: 9 trades and you're 100% invested? Well, it has a lot to do with your position sizing. So you heard Chris play 6.25% risk, which he does not recommend any of us to do. So if he had gone higher, if he'd gone 10%, he might not have been able to get 9 trades on. If you go 1%, you could probably get all 10 trades on, and 10 is a busy, busy portfolio.
Oh, 10's a huge portfolio. I don't think you understand how big 9 trades is right now. As you can see, I mean, I'm an hour deep and I've still got work to do on this. I once had somebody with a $3 million portfolio send me their screenshot, and they're like, hey, tell me what to do. And I'm like, bro, you have 90 trades on. You don't even know what you're doing. You're just buying stuff because you want to buy stuff. It's like you walked into the store and he's like, I'll take one of those. I'll take one of those. I'll take one of those. He doesn't have a plan. 10 trades is a buttload of work. I know it doesn't sound like much, but it really, really, really is a lot of work to do 10 trades. Keep it coming, Joe. I like this.
Yeah. Let's see. Out of 9 stocks, my screener showed only 4. I have the same screener settings as Chris. Swing signal turned on and the same book marklet. What could be the issue? Well, for me, I had trouble with order blocks, outlier blocks. And so I watched the live this morning, and I got the latest settings on the order blocks, and that helped me quite a bit. I didn't specifically have an issue with the screener itself, though.
I think if you scroll down further and then load more, that'll get you there. Because we can take trades that are up to 5 days old. That would make a difference there. You wouldn't even see them if you didn't scroll down further. Are y'all liking this with the Joe asking questions? Type a number 1 in the chat if you're finding this useful. Type a number 2 in the chat if you're like, I want to go somewhere. I got other things to do. It's not going to hurt my feelings. I mean, I'm a fund manager over here, fund managing, so whatever.
If you're 100% deployed and the monkey hits the market hard, isn't there a chance you get completely wiped? I guess you have emergency exits, but the market could gap down 10% on open.
You know what? If that happens, that happens. Everybody's going to get monkey hammered on that day, right? There's nothing you can do at that point. That's why we trade with the trend. That's why we trade with all the signals in place here, because it's less likely to happen while the market is looking beautiful than it would be elsewise. That doesn't mean it won't happen, right? But as I've shown this many times, black swan events usually lead, I would say 100% of the time, 95% of the time, are usually led by the market selling off ahead of time. Your 10 going under the 20, price going under the 50. Like it's obvious something's not right before the black swan happens. Because Joe, I would bet you there's members in Congress or in other places that they know when the black swans are coming and they are selling off their positions, and they make it very obvious when something's happening. All you have to do is pay attention.
Mm-hmm. We didn't get to see the sale out of SGov. Actually, we did on would have been Friday. Yeah. Yep. So Chris,
you're right. We didn't get to see that. I was on vacation. You're welcome.
But Chris was not in SGov today, because today would have been the day to buy it. But he went through the signals and he found that in fact Plan M was available. And remember, you work through the slides from left to right. And when you hit one, you see if there's any good trades, as long as that is your plan. And then ultimately you could get to SGov if none of the other signals are there.
All right, still on HBAN right now. HBAN's ATR is 0.35.
Don't we all just want to make money? But what you're going to find, though, is if you don't develop a plan that you can follow, it's going to be tough to make money. Like I've said a few times, I've had plans in the past that I found I just could not trade them, regardless of whether they were successful or not. I could not trade them. So there's no magic stamp in trading. You have to find what fits your lifestyle. Why fill at ask versus mid?
Good luck getting filled at mid.
I always go.
I would love to be filled at mid. I don't think you understand. That's money coming out of my pocket. I would love to be filled at mid, but it's not something that can happen all the time.
Yeah. And if you're trading on your own schedule, you can certainly go in at bid or mid, and give it a few minutes. I've actually had, well, for instance, when I get into SGov, I put in the bid. When I sell it, I put in the ask. By gosh, sometimes you get it. It's awesome. Yeah. So you can try.
Right. When you have time to wait, you can totally sit it at the midpoint and let it run for a while. I mean, you could potentially let it run for hours. And then maybe you'll get filled at that point. But remember, if you don't get filled and it runs from you, and you gave up a huge trade because you didn't want to spend those $5 extra to get filled, that's on you, buddy. That's on you, my friend. You're going to have to live with that. So for me, I am very much more pragmatic. Like, I want to get filled because this fits my plan. I don't care if I have to pay a little bit extra as long as I'm in. That's the point.
Yeah. If for some reason I'm trading in the middle of the day, I'll go into a 5-minute and I'll watch and make sure the 10's over the 20. And if it isn't, I won't trade right that minute. I'll kind of watch it and see if I get a short-term trend improvement. But if I'm, in a hurry or what have you, sometimes you just can't do that.
Joe, we're almost done over here. See how long this takes? Like, this is the not sexy part. Everybody just wants the entry signals. Nobody wants to pay attention to how to get out of the trade. They'll figure that out later, Joe.
What positions are you going to write into Discord? They're already there.
Should already all be there. In fact, let's go double check Joe's work. Joe's work. Yeah, Joe did it. Joe's got them all in there. Joe did some work, my friends. Even tagged everyone, so it should be good to go. Look, when Joe posts, y'all are okay to go, highlight and give him emojis and stuff too. It's not just me. Share some emoji love to Joe. He deserves it. That actually is how I know if it got out there, because people will go and put emojis. So let Joe know that you've seen it by dropping emojis. That really does make a difference. That lets us know it worked. If it didn't work, then nobody's going to post any emojis on there, and then we won't know that it actually got out, because we want to tag you and let you know when we are making these trades. That's the point. Yeah, Joe is amazing. Joe is awesome. Joe is the best. Joe.
Thank you.
Joe makes this so much easier on not just me, but all the outliers, because I would have to talk through all this, as well as trade it live, which was really, really, really hard. We reached a point a few months back where I was like, I can't trade live and do the show and take care of my trades and do everything I need all at once. It's just too much. And Joe was very gracious and offering to help run this part. That makes life a lot easier for me.
So tomorrow during live in the morning, you will roll if any are at half ATR?
Not in the morning. I don't do anything in the morning.
Nope.
Now,
The only thing you might do is a 3 ATR emergency exit during the day.
yeah, I don't want to do that.
Yeah.
I don't want to do that. But if I have to, I have to, right? Hang on, divided by 2 plus 4140. Okay, 4198. Just 2 seconds, Joe. F ATR rolling point at 4198. Okay, I think I'm done now. No, I put these on 20 minutes before the live stream started. And I only want to trade at the end of the day for lifestyle reasons. It just makes life a lot easier when you know what time you're going to be trading. That's also the most liquid time of day. But also it's exceptionally difficult to try and balance actually trading, because unlike other YouTubers, I actually do trade. It's crazy, Joe. Like, I'm a real fund manager around here. And so therefore I need to actually do the processes of running through the trades, having the plan and all that stuff. So it just makes life a lot easier if I can put it on before we go live. And again, to encourage you to run your own plan at any time of the day that you feel like it, right? You don't need to follow my plans during the day. Come up with your plans, run your plans. Joe, is there any more questions? Yes, we got one.
There is, yeah. If we continue following the strategy, rolling and adding another contract, how could impact the outlier plan if the stock continues rallying? Well, when we roll, we don't add contracts. We're selling to close the existing contract, and we're buying to open the new contract. So you're not adding quantity. But what happens? Well, Masters of the Universe happens, right? I mean, you make money every time you roll. You're removing risk, and you're rolling because it went up, which means the stock price went up, the contract value. Like, for instance, if you think of Chris's coupon analogy of going to the supermarket, and if you don't know what I'm talking about, check out the Outlier Alpha University videos.
Did somebody say Outlier University? Joe, you led me to this. I got to do it. Joe.
Are you ready? Let's go!
Respect is earned. Respect is never given.
Joe, thank you for that super soft pitch right there, my friend. Because tomorrow, during the trading room, I don't have to worry about putting on trades because I'll be 100% in. Maybe I have to take some off. But we're going to be working on Outlier University. Tomorrow's plan is to talk about how to make your own plans. I'm going to give lots of examples of what those plans are, because we talked about the psychology. We talked about, the very basics of what stock trading is. But I've talked about making plans so much. How do you even make a plan, right? We're going to talk about what you do with the market, what you do with the sector, what you do with the stock, what you do with position sizing, what you do with your exits, your entries. There's a lot that goes into trading. It's not just, I'm going to buy this, I'm going to buy that, right? AMD to the moon, SoFi Bros for life. No. If you want to be a successful investor, a successful fund manager, there's a lot more that goes into it. So we'll be covering everything that is part of making your plans in tomorrow afternoon's live stream. Now, 25% of you, 50% of you are going to listen passively, one ear and out the other. You're not going to do anything with your life. Right? 25% of you are going to implement, but you're not going to know what you're doing. You're going to screw something up, and then you're going to come back and you're going to say, Chris made me sell my SoFi shares. And then other 25% of you are actually going to listen, you're going to implement, and you're going to make generational life-changing money. The choice is yours. Okay. And we give you Outlier University 100% for free. There is no paywall. There is nothing. If you are an outlier, you get to watch a live stream. If you're not an outlier, that's cool too. You'll be able to watch the replay live on YouTube forever because we want you to be successful. That is our plan with Outlier University, to make you successful. Joe, let's do one more question. Let's get the hell out of here, my friend.
Let's see. Same question as David. Can I just go in tomorrow if price is close to the same? Well, if you're following this mindset, you're a trend trader, right? So if the trend is still going up and your plan signals are met, why not?
I have a similar yet different answer to Joe, and that is, you can enter anytime during an uptrend. Anytime during an uptrend. Let's go to AMD. You can enter anytime in an uptrend. Anytime during an uptrend. But only if your plan is set up. Now, I'm not going to tell you to enter tomorrow, and I'm not going to tell you to enter today. You need to have whatever that plan is for you, and you'll know that I preach a lot of personal agency. That's one thing that I'm a huge on as far as trading goes. But trends are going to go for a long time sometimes. But also sometimes, let's go to Tesla. Sometimes the trend can only last a few days, like this. Sometimes they can last a few weeks like this. We don't know. But as long as you're on the right side of the trend, you're at least trading in the right direction. I don't know if that was a great answer, but I thought it was. Joe, listen, this has been a huge day. Thank you all so much for coming. I know this went on forever. Super boring. Most boring random guy on the internet. But that is what it's like to actually be a trader, right? It's not all that the movies crack it up to be. Not all the social media influencers crack it up to be. I mean, I do have a fancy watch, but it's boring AF whenever you do it the right way. And that's how trading should be. So listen, if you were looking to save time, make money, start winning with less risk, what do you think they should do, Joe?
Oh, become an Outlier subscriber for sure. And then check out one of these videos here to learn more.
That sounds great. Thank you all so much for coming. I will see you tomorrow morning. We'll talk soon.